What's up, everyone? I'm back. $50,000 on the day. I am feeling good. Confidence is back at all-time highs. Account is back at all-time highs. It's funny how those two sort of go in tandem. The emotional roller coaster that we ride as traders. You know, it was just a few days ago, Friday, I was feeling pretty bummed out. It was a tough day for me. I had my biggest, so it was the worst day of the year. Granted, I can't really complain too much, but nonetheless, if you watch the recap, you know that I had a great morning and then I just gave it all back. Today, we had a stock that was halted on news. The news was that it was merging with a privately held company. So the merger was going to bring the private company into basically like an IPO, make it public. And here's the thing that's interesting about this merger. The current publicly traded company that we were trading does about $8 million a year in revenue. The privately held company that they're merging into, it does $80 million a year in revenue, 10 times the amount of revenue. So when I saw that news, I was like, this thing is gonna squeeze. And when it resumed, it was halted while the news came out, and then they scheduled a resumption time at 8:10 this morning, a.m. Eastern Standard Time. It resumed and went from like $4 all the way up to $9 a share in one candle, in basically 1 minute. And I made $20,000. Just like that. That broke the ice, put me in the green. And then from there, I kept trading that stock. And then we had a couple others that I was able to break the ice on. So wow, what a wild day. But definitely a day that highlights the importance of being able to react quickly. All right, so that's something that takes, well, educated intuition, right? Reaction speed gets better as you kind of just get a better sense of the right type of stocks to jump on and what type of news catalysts are good and what type are bad, but also the tool that you're using. So did you try to take one of the trades that I took and you didn't get filled? It could be because of the broker you're using, which is really frustrating. Trading is hard enough without struggling to not get your, getting your orders filled or struggling with platforms not working or hotkeys not working because of the broker you've chosen. So at the end of this episode, I'll do a little broker comparison. I'll share with you the brokers that I think are the best and which ones I would stay away from. Okay, so let's jump onto the screen share and start breaking it down. Okay, so right now, ATCH is up 82%. I didn't take any trades on this one. You can see I'm up on SYTA, $31,000. So this is the stock that had the merger news. And then Mullen, which is an electric vehicle company, surprisingly had a day of a pretty nice move, and I made $18,000 on that, which puts me at $49,535.58. So when I said I was up 50,000 on the day, I was rounding up a little bit. I wish I was up 50, but I'm not going to get too bent out of shape about the difference here. Okay, so let's go back to 7 a.m. So 7 a.m., well, about 6:30, I'm looking at my phone and I'm checking the scanners, and I'm seeing Envb is up quite a lot, and it already had over 20 million shares of volume between 4 a.m. and 7 a.m. So Envb, it's a 684,000 share float. So let me give you a little, let's do a pop quiz. All right, so let's get oriented here on Envb. Okay, so this is coming into 7 a.m. So we're gonna do 7 a.m. right here. That's the pop quiz. All right, so it's not gonna be as good of a pop quiz as you can see kind of what happens. But nonetheless, all right. So pop quiz, Envb is up over 100%. The stock has a float of about 684,000 shares, which is a very low float, but it started moving after hours in the previous session. Had news that came out after hours and it started squeezing up. Pre-market this morning, it's pushing a little bit higher, coming into 7 a.m., which is when most retail traders can begin trading. What do? Do we buy it or do we sit on the sidelines? For me, I said I can't trust it. Now, it did end up pushing a little bit higher, and I felt kind of like I left a little money on the table, but the reality is I didn't feel this had the potential to go parabolic because I really felt like I missed the bulk of the move. So on this one, I had already missed the move. This was the good entries down there, a little early pre-market, and at this point, it was just too extended. For me, I couldn't break the ice on it. Now, what's interesting is at the open, look at this squeeze from $3 all the way up to $3.90. You want to know what was interesting about $3.90? So let's back this up for 1 second. Let's look at the daily chart. $3.90 was gap fill. So a gap is formed when a stock is basically has a big, well, it usually has news overnight. And so overnight it has news, and then the next day it opens a lot lower, and you get this big gap on the daily chart. So gap fill on this was from about $2.40 all the way up to $3.90. So when it came up to $3.90, I was thinking this morning, we're coming right into gap fill, and we've got ascending resistance. So if we look at this setup right here, typically I'd probably be interested in doing a dip and a rip on a halt resumption. But in this case, I felt like overhead resistance in the 4s, 390, I just wasn't sure it was going to hold. And boy, I'm glad I stayed on the sidelines for that. So, on the one hand, there was probably money to be made, but I just didn't feel comfortable on Envb, so I got nothing. So that was started at 7 a.m. So 7 a.m., top of the hour, no trades. So then 7:15, waiting to see if something pops up on the scanner, nothing. 7:30, nothing. 8 a.m., nothing, but I knew that SYTA was halted. So SYTA was halted right here. And by the way, we have a halt scanner here at Warrior. So you can go to the scans, you go down to the halt scan. Where is it? Right here. So you can see the stocks that are halted on the halt scanner. So SYTA halted, and I was like, oh, that's interesting. Usually, we don't have stocks that are halted pre-market unless there's news. So I pull up the NASDAQ website, NASDAQ Trader and current halt, and I go down and I see SYTA is halted on a T1. T1 means it's halted pending news. So I'm thinking, all right, halted T1, and where is this? SYTA. So the news was released, and then the resumption was scheduled for 8:10 Eastern Standard Time. So I knew it was going to resume at 8:10. So when I saw the news headline on SYTA, and we'll scroll back to see the first headline that came out. This is the headline that came out at 7:39 a.m. So signs definitive agreement to merge with leading AI gaming developer Core Gaming. Okay, so I click on this headline and I start reading it. And I'm thinking, all right, so how does this all work? So I realized that Core Gaming's been independently valued at $160 million. Okay, all right, so that's fine. And that's what they're paying. That's the price they're paying for it. So was it in this headline, or maybe it was one of the others? There were a couple different headlines on this one. Let's see if it was this one. So just looking for about Core Gaming. So now I'm not sure which headline it was. There's obviously a couple different headlines. So I could see that it was $160 million valuation, and that was the price that they're going to pay for it. So I'm thinking, okay, that's usually when a company is merging, the company has to issue shares unless they have cash on hand to afford the merger. And so often the merger is going to, in the short term, be a liability. It's going to create a cost for the company that's doing the buying. So we don't always get good merger catalysts, but we have had a few recently. And so in this one I saw, okay, fiscal year, Core Gaming had unaudited gross revenues of $80 million. So I saw that, and then I thought, well, let's check SYTA and see what their revenues are. And I saw, okay, their revenues are $8.2 million. So now I'm thinking, okay, this is actually, this is going to significantly expand the company. So when I saw that, by that point, I realized that this was something I should pay attention to. So it was halted, and at 8:05, it began showing a resumption quote. Now, this had basically halted at $3.60. So when it resumed trading, it was showing a resumption quote of $5, and then it was $5.20, and then it was $5.40. Well, it kind of started moving higher. It was like $4.20, $4.40, $4.60, and then the resumption price just kept coming higher and higher. So it resumes, and because the resumption price was moving up, and because I was bullish on the headline, I thought, as soon as this opens, I'm going to try to take a position, and it's going to be a little risky because it's like trading a halt resumption. So it could dip, but I think it's probably just going to squeeze. And so I took my starter and I got filled at $5.54. That was my best entry. However, on a 5,000 share order, I actually only filled 450 shares. So I had to press the buy button again, and I filled 5,000 shares at $5.58. And then I filled again at $5.63. So now I've got 10,000 shares of it, and it's, well, a little bit more than that, and it starts squeezing up. It goes to 650, up to 750. Boom, I start taking some profit off the table, $20,000. In basically, I mean, it was like within a minute. It was instant. It drops back down here, it pulls back, and then as it starts to curl back up right here, you can see this little sort of move up. I started doing dip trades, and we got a couple of really nice dip trades on this as it curled back up. I was hoping that we were going to get a retest of this high here and push through $9. That did not happen, but nonetheless, from this low down here, which was about 650, we bounced all the way back up to 820. We pulled back, we bounced up, we pulled back, we bounced up, and all of this provided enough range for me to add an additional $10,000 of profit. So $31,282.69 of profit on SYTA. Now, it's since pulled back kind of a bit more than I would expect, to be honest, but I think part of the issue was that at the open, attention shifted. So what ended up happening was, while SYTA was sort of going sideways here, if nothing else had popped up, it probably would have moved higher because there wouldn't have been anything better to trade, and so people would have kept trading it. But Envb at the open, that squeezes up. Why is my V button not working? Envb, that squeezes at the open, so attention shifts to this. And Mullen, M-U-L-N, this one squeezes at the open and starts squeezing actually right at 9 a.m. So when Mullen first hit the scanner, I was like, I've seen this stock hit the scanner 1,000 times. And every time it hits the scanner, it sort of pops up a teeny bit and sells off. This is a stock that has done a series of reverse splits. It has just kept going lower and lower and lower and lower. It's kind of remarkable. So it's a stock that people were all excited about during the pandemic. I remember people buying it. I mean, you go back, it's insane to look at this chart, how terrible it is. So if you had bought this, back here, I'm not even exaggerating. This is one of the craziest, worst charts I've ever seen. So there are actually people out there who might be bag holders on this stock, and their price that would show. So if they bought it during 2021, this is absolutely insane. If they bought it back here in 2021, it's possible in 2020 that they're bag holders, they never sold. It's possible that their cost basis could be as high as $1.4 billion. In fact, it went as high as $2.6 billion. What? Now, this stock never went to $2.6 billion a share. What happened was, and let's get out the whiteboard, because this is an important thing that we should probably illustrate. So I'm going to pop the whiteboard out here. So the way this works with these reverse splits, let's do a mini lesson on how reverse splits work. So a reverse stock split. Now we're going to use Mullen as the example. M-U-L-N. This is a stock that has one of the worst daily charts I have ever seen. So what a reverse split does is it gives the company the ability to increase the price of their stock. Why would they want to increase the price of their stock? Well, there's a rule with NASDAQ listed companies that the company has to maintain a minimum share price of $1 per share. Now you might be like, well, wait a second. I see penny stocks all the time on the NASDAQ. Technically, those companies are out of compliance and they have a period of time that they can regain compliance. So how do you regain compliance? You get your stock price back up of $1. How do you get your stock price back above $1? Be a better company, have better earnings, or if they can't do that, they do a reverse stock split. Most of you are probably familiar with a traditional stock split. A stock like Apple goes from $10 a share to 20 to 40 to 60 to 80, 100 to 200 to 300 to 400 to 500 to 600 to 700. And then the executives at Apple say, the board of directors says, we can't keep our stock price at $700 for just one share. It's making it too expensive for regular people to buy our stock. And we want our stock to be accessible to regular people. So what do? A 7-to-1 stock split. So the next day, the stock is trading at $100 a share. And some people would be like, oh my gosh, the stock has dropped 70% overnight. What's happened? Well, the way it would look is if you were in the stock at $700, ooh, this is a very fine marker. So $700, let's say you're in the stock and you hold 1,000 shares. So what's the total equity? $700,000, right? $700,000. So the next day the stock opens at $100 a share. Oh my gosh, $100 a share times 1,000, you're down 600 grand. But then you realize you're now holding 7,000 shares. So you have the same amount of money in the position, same exact amount of money in the stock. So when a traditional stock split occurs, the number of shares that are outstanding goes up. So if we looked at a company, and I'll just pull this chart over here. We'll look at two companies that have done traditional stock splits. So Nvidia on the left, and we'll do Apple on the right. So if we go back on Apple's chart, because they've done traditional stock splits, they did one in 2020, they did one back in 2015. It makes it seem like, if you went back far enough, it would make it seem like the stock IPO'd at like 1 penny per share. Because essentially what it does is it brings the price down. And so if you just bring the price down, what happens to the beginning of the chart? The beginning has to go down, right? Because the chart otherwise wouldn't make sense. Like it can't have these big gaps. You wouldn't have a chart where the stock was moving up to 700 and then the next day it started 100 and it moved up again. They don't do that. They say, oh, it was 700. Well, the chart stays the same, but now all the price goes down by the ratio of the split. So that's the way a traditional split works. Nvidia daily chart down here, similar. You can see traditional split. So it makes it seem like the stock, a couple years ago was down at 22 cents. But it wasn't at 22 cents. It was never down that low. It wasn't at 66 cents. It's just that because of the splits, it makes it look that way. Well, with a reverse split, the opposite takes place. So with a reverse stock split, what do they do with the chart? So now let's take Mullen, for example. Okay, so Mullen, let's say you buy this at, whatever, $2. This, I can't use these markers. It's too fine. It's too fine. All right, so we buy Mullen at $2, so just $2 a share, and you buy, let's just say 10,000 shares. All right, so 10,000 shares, so you've got $20,000 in the position. All right, done. So then over the course, so then let's just say the company does, well, actually, let's do this differently. Let's say it's 20 cents a share and you bought 10,000 shares. So you've got $2,000 in the trade. So you've got a $2,000 position. And then the next day, so that's cents. So then the next day, the stock is at $2 a share. And you're like, oh my gosh, I have struck gold times 10,000 shares. I'm up, $18,000 on this trade. But then you realize, wait a second, I don't still have 10,000 shares. I only have 1,000 shares. So the ratio, the shares went down. And so with Mullen, at one point, let's just say the float was 10 million shares. And then they do a reverse split and the float becomes 1 million shares. And then they do another reverse split and the float goes lower and lower and lower and lower. So the float keeps getting lower every time they do the reverse split, to the point that right now Mullen has a float of 823,000 shares. 823,000 shares. But what is often the case with these companies is they do these reverse splits. The stock gets back above $1 a share, and then what do? A secondary offering. They sell 5 million shares on the market. So on a day like today, how much volume does Mullen have? Mullen right now has 45 million shares of volume. So if they sold 4.5 million shares, 10% of the volume today, 4.5 million shares at $4 a share, they're going to raise $17 million, right? That's a lot of money. For a company like this, that makes a big difference. So this is very common that they'll sell shares on days like today when there's a lot of volume to sustain the selling. But because they've sold shares, that's bad news. So when the news comes out that they've sold 4.5 million shares, it's massively diluting the 800,000 shareholders that are remaining. There's only 800,000 shareholders. They just sold 4.5 million shares or whatever it is, just in that example. And now the float goes from 800,000 shares to 5 million shares. And then what do? Well, the stock drops. It goes down over the course of weeks and months until it's back below $1. And then with a 500,000 or a 5 million share float, they do a 10-to-1 split. Stock goes from 50 cents back to $5. And then the float goes down to 500,000 shares. And then they do another secondary offering of 5 million shares. And then boom, 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 the stock goes down again. And it keeps happening again and again and again. So then when you look at the chart, in order to make the chart so the current price keeps getting lower. So what happens to the beginning of the chart? Well, it makes it look like the beginning of the chart was started at a higher price. And so in this case, the beginning of the chart on Mullen, well, not the beginning, but the high of this chart over here is over $2 billion. So it's insane. But if you had bought here, you could have a position. Now you would end up having, unfortunately, because of the way the shares work, every time they do the split, your shares go down, and then they go down, and then they go down. So you would only have like a fraction of a share at $2.6 billion. But yeah, that's what you would have as a fraction of a share if you were someone that was a bag holder from back here. So essentially what happened was the company came down, and then they did 1, 2, 3, 4, 5 stock splits. The first one was 25 to 1. The second one was 9 to 1. The third one was 100 to 1. And they did these all within basically 6 months, 7 months. And that was because the price kept dropping and they had to maintain compliance. Then they did another one here in September, and then they did another one here just a few months ago. So it's just, it makes the chart look crazy. It's really insane. So now we click auto, and you can see it just goes lower and lower and lower. So here's the thing. There's two things. Number one, the NASDAQ has, and it actually may be FINRA and the SEC, have just released a rule that companies will no longer be able to do back-to-back reverse splits. So if the company has already done one, they're not going to be able to do this anymore. And so a company like Mullen, at this point, if they're not able to keep their stock above $1, they'll probably get delisted from the exchange. They'll just get kicked off the exchange. And that's going to be a good thing for traders and investors, because these types of companies that they just really kind of abuse retail traders by just selling and selling and selling. And it's really not good for the market to have stocks that look like this. This is not a good thing. So this is ultimately going to be going away to this extreme, but it will still happen to a certain degree. Reverse splits will continue to be allowed, and companies could do them, could do multiple reverse splits. They just won't be able to do them back to back like this company did. So naturally, a stock like this, a lot of people are going to say, well, geez, I should just short it, right? All I have to do is short it. And the bottom, it basically what they do is they just make it so it can continue to go lower. It's like an endless pit. It just keeps going lower and lower and lower. It's remarkable. So shorting it is clearly the easier approach on this. And from a long-term perspective, that would seem to be the case. However, what is also true about these stocks is that when they get really beaten up like this, just totally, completely dead, what can happen, and we've seen this happen before, is all of a sudden you get to a place where the float is 823,000 shares, and 50% or 75% of the float is holding the stock short because it's, because they know what's going to happen. But then maybe the company does put out good news. Maybe it's not fantastic, but it's good enough that some traders jump on it. And because a lot of the float is tied up with short sellers, the actual freely available float is lower, and suddenly it squeezes up 50% or 100% or 200% on the day. In fact, we had a stock that did something very similar to this that in one day went up to over $100 a share from about $8. And all of a sudden shorts are down a lot. And it doesn't make sense, but they're down depending on where they got in. Of course, if they've been holding for months, then they're not down that much, but it created this huge squeeze. It was very powerful. So buying a stock that is, within 50 cents of its all-time low is pretty much buying the low, buying off support. There's some good reason and logic around that, and I can get my head around that. So anyway, so Mullen starts to pop up, and it's popping up even a little bit more as we speak. So my initial approach was today, and I'm up $18,000 on this. So my initial approach when it first popped up today was, I've seen this stock a million times. I don't have any interest in it. I don't think it's going to do much. However, it pops up, and this was pre-market, a little bit past 8 a.m. It had some news. Pops up, drops down, pops up, double top. Double top right there, about 320. Pulls back again, comes back up, And I had other stocks I was trading, but it pulls back, it pushes higher, goes up to about 380. And I was like, that's pretty strong. Pulls back here, breaks 380, goes up to 4. And this is where I pulled it up. I was like, okay, all right. Now at this point, we're starting to get into territory of being up, close to 100%. So this is going to start catching people's attention. I got to watch this. And this candle here squeezed up really quick to 440 and then dropped back down. And that usually happens when someone executes a marketable order for a fairly large position. And there was about 119,000 shares on that 10-second candle. So I'm thinking, all right, did someone just do a marketable order for like 100,000 shares? And who would do that? You wouldn't be a buyer up here for that kind of position, I don't think. So I'm thinking maybe it's a short who's covering. So now I'm thinking maybe there are some shorts that are in this that are going to need to unwind that position. So I said, if it can come back to this level, I'm going to add. It comes back to that level, and I added right there at 440. And it squeezes up to a high right here of 480. It pulls back, it pops up, pulls back, pops up to about 490. And as we come into the open, it comes up again. And we had this nice base off support here, and then the squeeze up to 460, pull back, pop up to 510, pull back, and then into the open, this pop up to about 548. So I got a couple really nice trades on it, and I was pleased with that. I was happy to trade the price action, but I didn't want to overstay my welcome. And so when I saw it pulling back, I said, I think that's good enough for me. Now, as it moves higher here, clearly the level to watch is the high a day, because if it breaks through the high a day, then max pain for anyone who is still short, or potentially anyone who added short here thinking, oh, in 3 days, the stock's going to be back at 50 cents a share. So this is going to be a nice swing trade. Well, maybe it will, but maybe not. Right now, it's looking like the long bias traders are taking control. But it most likely is going to be control for just a very short period of time, because the big picture of this company is pretty clear. It keeps selling off. So whenever I see a chart that has a series of these reverse splits, on the one hand, you could approach them with some caution and know that the overall trend is that the stock tends to drop. On the other hand, you could be buying something that's been very beaten up, is right off the low, that does have a higher short interest, and with news could squeeze up 100, 200, 300% on the day. It's not impossible. So that's kind of the setup there. It's a day trade. It's not a long-term investment by any means, but it's a day trade where we're sort of capitalizing off of the history of reverse splits, how it's created a very low float, which means if there's a high level of demand, because they do put out news that's good, or shorts start to cover, which creates buying demand, then all of a sudden you get this big swing back up. But look at this, Mullen now back down at 394. So let's just look at that chart. Yeah, so I mean, you could tell there's some sort of probably somewhat coordinated bear raids where short sellers are saying, let's just try to bury this stock, because once it is half dead, people are they won't touch it anymore. So this is where you're going to get some more aggressive tactics of traders putting up bear walls, really trying to knock it down and bury it. And they probably will succeed. But anyways, it's important not to overstay your welcome. So now you've gotten a good lesson on how reverse splits work and this kind of example today, but you'll continue to see reverse splits in the market. There's no question about it. So anyways, that's it for today. I hope you guys enjoyed this episode. If you did, please hit that thumbs up. I hope you're subscribed to the channel, and I will see you for the next upload real soon. And let me remind you, as always, my results aren't typical. I've been trading for a long time, so please manage your risk, take it slow, and I'll see you for the next episode real soon.